Let's take a look now at the biggest themes in Canadian energy for the year and get an outlook on what to track for the year ahead. We're joined by Thomas Timmins, leader of the Energy Practice Group at Gowling WLG. And Thomas, thanks very much for joining us today.
Good to see you, Roger.
All right, let's start with the traditional energy. What are we looking at? What were we looking at? What will we be looking at? Is any of what's unfolding right now geopolitically having an issue?
Well, we're fairly positive on Canada, as you might imagine. Despite what you might see in some of the leading headlines, Canada is, and we saw this with the inflation numbers, Canada's doing well, and as I like to say, sitting pretty. At the end of the day, traditional oil and gas has continued. There's renewed hope for LNG, particularly going into Asian markets. The traditional oil markets have continued, and Canada remains a stable, predictable, open trading nation, and that makes a big difference in global markets. And at the end of the day, as I like to say, if we stick to our knitting and keep doing what we do best, things look fairly positive going forward.
Now, we've heard talk, though, that oil and gas is becoming a part of our energy supply as opposed to the part of the energy supply. Do you see it heading that way?
Yeah, absolutely. And your previous speaker, I think, made the point quite well from the point of view of the oil and gas definitely is under threat. We are seeing even some of the world's leading oil and gas producers, like Saudi Arabia, on their way to shifting from being petrostates to becoming electoral states, as the new terminology has it. At the end of the day, in the background of all of these, of the entire energy sector, is the shift and the declining prices that we're seeing in solar and battery storage or energy storage technologies. That is kind of basically like compound interest. We tend to underestimate its impact in the short term, overestimate it in the short term and underestimate it in the long term. Battery technologies have gone down. Battery storage costs have gone down quite substantially just over the past year, over 45%. And over the past decade, They've gone down 9%. And so what does that mean? That means that intermittent technologies like solar and wind, which are also declining in cost, are definitely shifting the story. And of course, everything in our industry, every industry in our economy is electrifying. That's not going to happen overnight, and I think investors know that. But at the end of the day, that's the kind of the mega trend that people are watching. And
I believe I saw a stat. I think green energy, it's outperforming the market right now, is it not?
Yeah, absolutely. And there's people are paying a lot of attention to the global south and kind of the rest of the world that's out there. So, our American cousins have made a major policy shift, directional shift over the past 18 months. The overall trends, overarching trends globally. There's an excellent book that came out this year, Here Comes the Sun, by Bill McKibben, where he cites a lot of really great statistics on this, including a very interesting statistic that more than 90% of the power assets that were built on Earth last year were renewable. And that is just an astonishing figure when you think about it. So people, I think in Canada, we tend to think quite locally. And in Canada, of course, we're blessed with hydro and nuclear assets and gas assets, and of course, oil and gas assets that have been built over many generations. But at the end of the day, it's really hard to kind of fight the tide and the declining costs of solar and wind, and in particular storage, and the technological change that's happening there. I've compared it in the past, and many have compared it in the past, to the advent of software and how they've said software is eating the world. Well, solar is also is eating the energy sector, and that is slowly it's taking place, but it is accelerating.
And where does that leave Canada? I mean, we seem to have backed away from, or felt like our policy at least has backed away from a little bit. We've leaned towards gas and oil. Are we keeping up? Are we in a good position, does it feel like?
Well, I'm actually quite interested and quite excited by a number of the federal government maneuvers or moves over the past couple of years. The introduction of ITCs, investment tax credits, are a really interesting play for investors. The ITCs are basically technologically neutral. So basically you have the federal government saying, hey, we want to support this energy transition. We don't care how you do it, private sector. Let the animal spirits of the private sector find a way. And so you don't have governments or government agencies picking winners. You have the private sector and the push and pull of the private sector finding those winners. And so Canada's made, I think, at the federal level, a good move there from a tax point of view. And really now it's up to the private sector to find its way. And I'll just say from being at the front lines of this as an energy lawyer, the private sector is finding its way. And there's a lot of interest in Canada. Once again, I can't emphasize enough how our reputation, and there's been a lot written recently about Canada's amazing reputation, our reputation in the world as a stable, predictable, open economy and a steadfast open economy is really strong right now. It's a great place to invest. And the renewable sector, remember, there's Quebec, there's Nova Scotia, there's BC, there's Ontario. The renewable sector in all of these provinces, including Alberta, where oil is where solar penetration and wind penetration are actually the highest. There's a lot in play going on right now, and also the introduction of new technologies into the grid, the idea of a transnational power corridor, not an oil and gas, and the Prime Minister was quite clear about clarifying this in front of the media. It's not an oil and gas pipeline, it's an energy corridor. The idea of east-west transmission, energy sovereignty, all of these things put Canada in a very good place. And the other thing, our debt to GDP ratio at the federal level mean that Canada does actually have money to invest. So it is an exciting time. And even just making reference to the 7 gigawatt plans that Nova Scotia has for offshore wind, that's an incredible project that has some history to it when you think about the offshore oil and gas legacy of the eastern provinces. So there's, I'm fairly optimistic about Canada, to put it quite bluntly, Roger.
All right, let's end it on that upbeat note then. Thomas, thanks very much for joining us.
Great seeing you.
Thomas Timmins is leader of the energy practice group at Gowling WLG.